Hello, my name's Rupert Pontin and I'm Head of Insight and Communications here at Brego. I'd like to welcome you to the February 2026 Brego Auto Intel broadcast, in which we're going to have a look at what happened in the UK auto retail sector during the month of February 2026, as well as a short summary of the political position and the UK economy that drove retail consumer behaviour during the month. So let's get underway. Let's have a look at the economic update, and let's firstly address the elephant in the room, and that is the joint US-Israeli attack on Iran that started on February the 28th. At the point of recording, the global economy has become hugely unstable and the conflict is beginning to gather pace. Clearly something that will significantly impact the UK in a myriad of different ways. But for the most part, the economic outlook for February was fairly good and in line with expectations and forecasts from January, which is a positive. And as predicted, the rate of inflation did drop back down to 3% and is now at its lowest level since March 2025. The core drivers behind this were the consumer prices, which actually fell by 0.5%, and transport costs, which were slightly lower at 2.7%, lower than inflation rate, and recreation and culture at 2.6%. However, we must expect that rate of inflation to become very unstable in the coming months as the aggression continues over in the east. Once again, the bank base rate remained stable at 3.75%, and the next decision will now be announced on March the 19th, although it is more likely that it will now increase to 4% rather than continue the steady decline that was being signalled earlier in the year. And that's going to put its way forward to some higher costs of living for people ahead, which is unfortunate. The consumer confidence index actually decreased by 3 points to -19 in February, which was a bit of a surprise. And the business confidence rate remains steady at -19. And of course, that's the case because it's a quarterly measure. In addition, the average cost of a litre of unleaded petrol dropped from 131.7 from £1.32 the previous month, and that further helped ease the cost of living, although this has already started to drastically increase as we see difficulty in getting oil through the Hormuz Strait. The average mortgage rate has improved very slightly to 4.2% for a 2-year period mortgage. The market was expecting a bigger drop, but again, unrest in the property market does continue, so that's stayed where it is. Finally, the unemployment rate increased slightly to 5.2%, and this now looks set to rise a little bit further in the coming months, but it's very difficult to tell at this stage. This is a turbulent geopolitical time and it is affecting many economic outlooks worldwide. So the country must expect increasing costs across the board for the foreseeable future, which is difficult to accept, but it is just where we are at this particular time. So what's happened in the new car market? And this is with data courtesy of the SMMT. So the good news is that February was a stellar month in comparison to February 2025. And it's worth mentioning it is the best February for new car registrations since 2010. So that's fabulous news. So overall new car registrations were up by 7.2% compared to last year. And that means that 2026 is already 4.2% up on 2025. The good news is that the increase in new car registrations is coming from the private buyer with an uplift of 17.6%. And that represents a 39.1% of market share. And that's up 3.5 percentage points on February 2025. So year to date, it's a 27.4 market share, and that is up 9.4% on 2025. Fleet registrations were also up by 1.8%, and that means a 59.4% market share, which is 3.1 percentage points lower than in last February year to date. So you can see what the boost in the private registrations is doing. EV registrations improved, showing an increase of 2.8%, and market share for the month was 24.2%, which is 1.1 percentage points lower than in February 2025. Year-to-date, EVs have a 21.9% share, and that's actually 0.8 of a percentage point behind where we were last year, which is disappointing, and it must change as we head towards that higher 33% target of the registrations. Plug-in hybrids were up by 43.5% with an 11.6% market share, and that's 2.9 percentage points up on February 2025. And year to date, that's an increase of 45.9%. Petrol registrations were up 5.2% for the month, and the market share was 0.9 of a percentage point lower as a result of that. Diesel were down 3.85% for the month, and 4.5% market share, which was down 0.5 of a percentage point on February 2025. So the OEM top threes, Volkswagen at 7.9% total share of market, Ford in second place, they were in third place last month at 6.7%, and BMW at 5.13%. Top three sellers, the Ford Puma, the Kia Sportage in second place, and the Mini Cooper in third place. There was only one Chinese model in the top 10, and that was the JQ7, and they were in fifth spot. From the Chinese brands on sale in the UK, they took 12.8% of all registrations. Now, that does include Volvo, just making that clear. MG were at 3.4%, BYD at 2.4%, and JQ at 2.25%. So let's have a look at the used car market, and we're going to be using the insight from Brego Whole Market data, okay? So total adverts were up by 0.1%, very, very slight enhancement there. It's now really reflecting a stabilized market, and that suggests that sales are probably matching supply for the time being. Now, pre-reg adverts, which we've been watching very closely, were actually down by 11.1%, which is perhaps a surprise given it's in the run-up to the new registration plate, and some may have been expecting a push to meet targets, pre-registered vehicles to make sure they get the bonuses, although it is likely that we will see that kind of pre-reg activity showing in the March data. Trade adverts were down by 1.9% as the market balances out after the January sales have finished. EV adverts were up by 8.5%. They were up by 24.8% previous month, so that's less than had been expected, although we must now always expect to see a rise in volumes of this type of propulsion because of the shift towards EV as a whole. Now, hybrid adverts were down by 1.2% after an increase of 13.7% last month, and that's likely to have been sales driven and a slight shortage of stock, I think we're hearing in the marketplace. Now, petrol adverts were down by 2.6% as well. From a sales perspective, sales were up by 2.9%. That's good, that's positive. Not quite the 36.1% we saw in January, but that is always going to be bigger as the used car market returns after the festive period. Days to sale were down 4.3 and now rest at 42 days, and that's normal to see that decline following the clear out of cars that were put on sale at the end of 2025. EV days to sale down 3.5 to 42, and that matches the ICE cars. Please note that we have removed outliers from that, those high-end luxury vehicles that can take well in excess of 100 days to sell. The average used car price went up by 1.2% and now sits at £16,999, and the average price of an EV came down 2% to 22,859, and that is continuing to decline as we see more older EVs come back to the used car marketplace, and of course we see on the later plates the cheaper models coming back to the used car market. So to summarize the Brego Auto Intel for February 2026, it was a more balanced and more normal market with improved footfall and better digital engagement, and of course a slight upturn in sales. Now, pre-reg activity, as we've said, that seems to have tailed off quite a bit with that 11.1% drop, although it'd be interesting to see what happens in the March data, whether that reflects any sort of major sales push at the end of the month. Despite a reduction in consumer confidence index, the auto sector really still performed pretty well, better than other retail sectors, to be honest. This could be due to the inflation rate drop, though, and hopes of further bank-based rate change at the time, which we now know is unlikely. Now, used EV demand and sales rallied a little bit, and that's really as the consumer has got used to the fact that there will be pence per mile charges coming in 2028. So that's sort of a normalization of the market as I expected. However, there has been a further backlash on road tax-free EVs as some owners receive their new rates, and it will be interesting to see whether that impacts further on the marketplace. The wholesale market's still pretty well balanced, to be honest, and buyers are still eager to find used car stock. In fact, shortages of certain brands and models have seen random short-lived price peaks over a couple of days, and condition is now becoming less of an issue as people are prepared to do a little bit more work to get the cars ready for the forecourt. There were 19,456 used Chinese cars advertised in February in 2026, and that represents 2.3% of the total market. And of course, this is one to watch. I will highlight that doesn't include Volvo products, even though they're owned by Geely. Well, I hope you found this another valuable review of the auto market. And if you want or you need more detail, be sure to read the Brego Monthly Car Insight Report, and that can be found on the LinkedIn page and also the website. Or, of course, just reach out to me and I will get that across to you. We're now also posting insight and updates on our YouTube channel, and that is called Brego-Official, so feel free to look that up. And we also have some exciting news coming up with 2 new partnerships, so watch out for those announcements on social media. So finally, I just want to reiterate that if you want to improve your market insight and understanding of today's auto UK sector, then you need to speak to the Brego sales team. Andy, Safi and Nick would be delighted to show you how the Brego pricing and market data will help you to improve your understanding of the market and ultimately increase profitability, because that's what it's all about. Remember, they don't bite, they're here to empower you. So just reach out, have a chat and see where you go. Thank you very much for listening. See you soon.